Welcome back to Investing Talk podcast. Today we are launching an in-depth exploration into one of the most talked about names in the technology and community space, Reddit. The big question from you, our dedicated listeners, pretty simple. Is Reddit a good time to buy right now? We've gathered and synthesized analysis, looking at everything from the recent pivot towards operational efficiency, technical indicators, and their future roadmaps. Our goal today is really to pull out the key nuggets of knowledge you need so you can make a fully informed decision without, well, drowning in all the daily data noise. Before we get into the analysis, though, please just take a quick moment to subscribe, like, and comment. And hey, if there's a specific company you want us to look into next, definitely leave a comment below and let us know.
Yeah, this is a really important one to look at right now. Reddit has, for a long time, been seen as having high potential, sure, but maybe poorly monetized, kind of a curiosity. What's critical for investors to grasp now is that the company seems to have genuinely moved from being just a speculative play, this unique culture that might eventually make money, to actually demonstrating real, reportable operational efficiency. And that shift, that change in its financial identity, makes this a really pivotal moment for anyone looking at the stock.
Okay, let's unpack that. That turnaround we've seen just in the last few months seems pretty dramatic. Reddit's been extremely busy, hasn't it? Especially focusing on turning all that massive user engagement into, well, reliable revenue. So what are the key events, say, from July through September 2025 that have really shifted investor optimism towards the positive side?
Well, the single most critical piece of news, no question, was delivered back in July 2025. That was the company's report of its first profitable quarter ever. Now, for a company that, let's be honest, struggled for years to turn eyeballs into profit, this was monumental. It immediately smashed analyst expectations. And that profitability, it was mainly boosted by a sharp rise in ad revenue, but also coupled with increased user engagement. It basically proved the underlying business model could actually work.
Right. And what gives me some confidence, that this wasn't just a one-off, a fluke, is that they seem to actively drive that commercial success.
Yeah.
They weren't just sitting back waiting for ads. They launched a whole new suite of tools specifically for sophisticated advertisers, big brands, things like advanced targeting, measurement features. That kind of move is essential, isn't it, to attract those bigger enterprise-level media buyers who need more data, more accountability?
Absolutely. That's key for moving up the value chain in advertising. And they didn't stop just at ad tech. If you look into August, they really underscored their commitment to, let's say, future-proofing the platform through strategic tech integration. They announced a pretty high-profile partnership with a prominent AI service provider. Now, this is more than just a press release. The partnership is focused on using AI to actually enhance content moderation and also personalized recommendations. That signals a real commitment to integrating emerging tech that, well, hopefully improves the user experience and, crucially, improves platform safety and the data quality for advertisers. Big pluses there.
And that focus on operational quality, it clearly paid off in the market, didn't it? Because by September, we saw some pretty undeniable market validation. Reddit shares were added to several mid-cap index funds. Now, for listeners who might not know, index inclusion is a big deal. It basically forces passive funds tracking those indexes to buy the stock, right?
Exactly. It prompts that short-term spike in trading volume you saw, but maybe more importantly, it provides structural inflows from passive investors over time.
Kind of puts a floor under it, in a way.
It helps de-risk the capital base, yeah. We also saw their big institutional showcase. They called it Reddit Day. And there, they revealed some early monetization wins coming from their growing creator economy initiatives. That tells the institutional money, the big funds, that the platform isn't just relying on old-school display ads anymore. There are new, diversified, hopefully scalable revenue streams actively coming online. It just further validates the business model.
Okay, so the operational machine seems to be running smoother, definitely better than before. But as investors, we always have to ask, is that new efficiency actually hitting the bottom line? Let's look at the financial health picture.
Yeah, the financial health picture is dramatically improved. Revenue growth has been really strong. They reported $1.3 billion in 2024. That's a huge 61.7% increase over the previous year, massive jump. But here's the really critical data point for the whole health narrative. They reported trailing 12-month net income of $216.3 million. Now, compare that to the prior year's loss, a substantial loss of $484.3 million. That's a massive recovery. It really demonstrates that improved operational efficiency and cost discipline we were talking about, and that leaves the trailing 12-month EPS, earnings per share, standing at $1.16.
Wow. That profit flip is absolutely foundational to the current investment story. But we have to talk valuation and what the analysts are saying. Where do the pros stand on this?
Well, the overall sentiment is incredibly bullish, actually. You've got 27 analysts rating the stock as either a buy or a strong buy. That's a strong consensus.
Okay, but here's that wrinkle you mentioned earlier.
Yeah.
The consensus price target for the next 12 months is, what, $201.24?
Right.
Which is actually a bit below where the stock is trading right now, around $206.89. How do we square that?
That specific difference, that delta, is a really crucial insight for investors, and you shouldn't just brush it off. See, with a high momentum stock, especially one that's just confirmed a fundamental pivot like profitability, analysts often lag the market price action. The stock price runs up fast on the news, while analysts, they take time to update their complex financial models. So the fact that the overall group remains bullish, even though the price is a bit ahead of the target, implies a couple of things. One, the street probably expects continued upward revisions to those targets. And two, it suggests the market believes the momentum is maybe stronger than the current consensus models are capturing.
Okay, that makes sense. And that strength, you argue, is built on their competitive moat. What makes Reddit structurally different from, say, Meta or X?
Right, if we take a step back, look at the bigger picture, the unique advantage for Reddit is really the depth of its communities, not just the sheer breadth of users like some others. Reddit operates this dominant digital community platform, and it's centered entirely on interest-based communities, these subreddits, at a global scale. You've got over 100,000 active communities. That creates powerful network effects. People go to Reddit not necessarily to see what their friends posted, but to find their specific tribe, their niche interest. And that user stickiness, the dedication people have to their specific subreddits, that's what makes it defensible.
That high user stickiness is interesting. Does the data actually show that? That users come back more often to specific subreddits, really seeking out niche content, compared to maybe the more passive, endless scrolling you see on platforms like, say, TikTok?
Absolutely. The engagement is fundamentally different. It's often more intent-driven. Someone goes looking for information or discussion on a specific topic. And when you combine that deep user intent with their ongoing innovation in AI-driven moderation, which is crucial for those communities, and their advanced ad tech, well, it makes their data uniquely valuable, and that adds real structural defensibility against the more generic social media giants.
Okay, this is where it gets really interesting then. We've seen the backstory, the recent turnaround. But what about the immediate future, the volatility? Which specific dates and events should you, the listener, be watching closely over the next 3 months or so?
Yeah, this is definitely a highly event-driven stock right now, so calendar's ready. October 24th, 2025, that's the Q3 earnings release. This is the pivotal focus. The market is going to scrutinize whether that profitability we saw is sustainable. Can they deliver a second clean quarter? Can they keep up that high ad sales growth? A miss here, given the high valuation premium we talked about, would likely punish the stock pretty severely.
Okay, October 24th. Got it. And what should we look out for in November?
November has a couple of key potential drivers. First, you've got the anticipated ETF and index rebalancing events. These are more technical, but they can cause significant trading flows, buying or selling pressure. Second, we'll start seeing the institutional 13F filings for Q3 roll in. Now, for listeners, a 13F filing shows which big institutional investors, the huge funds managing billions, bought, sold, or held the stock in the last quarter. It's how we get a peek at large holders' positioning. It reveals institutional conviction in the name, or maybe signs they're getting nervous.
Right, seeing what the smart money is doing. And December sounds like it's all about looking ahead.
Yes, exactly. December is focused on visibility for the coming year. We anticipate the crucial Q4 guidance and probably an Analyst Day event. This event will provide critical insight into their product roadmap, their monetization plans for next year. And alongside that, usually around mid-November, but relevant for Q4, is the all-important holiday season ad spend report. This report kind of measures Reddit's performance versus its key social media peers during the most lucrative advertising period of the year. Big benchmark.
Okay, let's talk price action itself, because it has been volatile, showing that momentum you mentioned. Stock's currently around $206.89, but it rallied sharply from a low near $150 to a recent high above $282.95, all in just the last 3 months. That's a big move.
Huge move. And that steep rally means we absolutely have to look closely at the technical position right now. The good news for bulls is the structural uptrend seems intact. The stock is well above its long-term 200-day simple moving average, or SMA. That's a strong support line, currently sitting around $161.43. However, it is currently trading just below its 50-day SMA, which is at $218.07.
Why is that 50-day SMA significant right now? Does dipping below that signal maybe a short-term warning for momentum traders?
It absolutely suggests that some short-term consolidation and profit-taking are underway. It's pretty textbook. When a stock trades below its 50-day average after a sharp run-up like Reddit had, it often indicates that the quick buyers, the short-term traders, are taking some money off the table. Now, it's not necessarily a breakdown of the overall trend, not as long as it holds above that 200-day line, but it does suggest we're in a period of rest, maybe a pause, or potentially even a pullback towards, say, the $185 level before the next catalyst hits. And the relative strength index, the RSI, it's neutral, right around 49.5, which kind of confirms this lack of strong directional momentum right now, sideways action.
Okay. Now, every high-growth story, especially in tech, has its share of speculative elements, right? Powerful sentiment drivers. What are the key rumors or speculations circulating right now that could really move the stock price, even without concrete facts just yet?
Yeah, there are definitely a few narratives floating around, four key ones, I'd say. First, there's persistent buzz about potential takeover interest. The story goes that maybe a major tech giant, one perhaps lacking robust community scale or that deep, specific user data Reddit has, might explore an acquisition to gain that asset quickly. Given how unique Reddit's dataset is, this rumor tends to stick around. Second, we keep hearing buzz about a major international expansion initiative. The rumors seem to center on potentially large moves into high-growth, currently under-penetrated community markets, places like India and Southeast Asia. That would obviously open up huge new avenues for user growth outside the more saturated U.S. market.
Interesting. And the third rumor, that sounds like it's about diversifying away from just relying on ad revenue.
Correct. There's chatter pointing towards a potential new premium subscription tier. And this wouldn't just be, paid or move ads. It could potentially include advanced AI features, maybe for content summarizing or perhaps enhanced privacy tools. This would be a really crucial step, if true, in diversifying their revenue streams away from that heavy reliance on advertising. And then finally, number 4, following their recent inclusion in those mid-cap indexes, some analysts are privately discussing the expectation that Reddit could soon be added to the S&P 500 watch list. That's always a colossal sentiment booster and usually precedes enormous passive inflows if it happens.
Right. Lots of potential catalysts there, some more speculative than others. But we always have to maintain balance, look at the flip side. Given this is a high-growth, high-momentum stock, what are the primary concerns, the key risks for you, the investor, to keep in mind?
The primary concern, without a shadow of a doubt, is valuation. This stock is priced for perfection, we mentioned it earlier, with a trailing price-to-earnings ratio, PE, of 185 times, and even looking forward, a forward PE of about 89 times. The stock trades at a significant premium. Just for context, a highly successful competitor like Meta might trade around 30 times PE. That illustrates the massive growth premium already baked into Reddit's current valuation. This high multiple makes the stock extremely sensitive to any perceived deceleration in growth momentum or, heaven forbid, any missed earnings targets.
Yeah, that kind of multiple means the company has almost zero room for error in its execution.
Exactly. And that brings us to the second major risk, execution risk itself. Scaling rapid growth while simultaneously trying to manage complex content moderation across, 100,000 often highly polarized communities, that is incredibly difficult. They also have to maintain platform security, ward off bad actors, and navigate ongoing regulatory uncertainties, especially those ongoing discussions with European privacy regulators. These challenges are significant company-specific risks that could absolutely derail investor sentiment if they stumble.
And speaking of challenges, how exactly does Reddit compete with the existing giants? You mentioned Meta, Discord too. We can't just list them. What's the competitive dynamic?
Well, they compete fiercely, but often in slightly different lanes, if that makes sense. They definitely compete with Meta and X for those large-scale digital advertising budgets. But Reddit's community structure makes it maybe less of a direct, general-purpose social threat. Where they probably run into the most direct competitive threat is with a platform like Discord. Discord really excels at small, private, synchronous, meaning real-time niche communication. Think chat rooms, voice channels. Reddit competes by providing these massive, searchable, asynchronous, meaning not real-time public knowledge bases within its communities. So Reddit's challenge is really to ensure its infrastructure remains the absolute premier destination for deep topic-based knowledge sharing and discussion, keeping that edge over platforms geared more towards fleeting chat.
Okay. So after peeling back all these layers, the profitability flip, the impressive growth, the technical picture, the rumors, and definitely the risks, what's the overall investment verdict here?
Taking it all together, the overall rating leans highly bullish. I'd put it at an 8.5 out of 10 right now. The investment thesis feels pretty firmly supported by that rapid revenue growth, the decisive flip to profitability we saw, and what seems like a genuinely strong, defensible competitive moat built on those community network effects that are really hard for others to just replicate.
And who is this stock best suited for right now, would you say, given the momentum and the valuation?
It's interesting. Reddit looks attractive for potentially two types of investors right now. Both short-term traders who might look to leverage the expected volatility around that pivotal Q3 earnings release and any upcoming product news, and also potentially for long-term accumulators, investors looking to capture the secular growth trend in authentic digital communities and bet on Reddit's growing platform innovation over time.
Okay, this raises one final and I think really important question for you to consider as you weigh this opportunity. While the company has shown strong trailing 12-month profitability metrics, that big number we discussed, some of the underlying balance sheet strength, well, it still lacks full definitive verification. That's because we're waiting on the recent official SEC filings, like the detailed 10K or 10Q. The next one's expected around October 28th, 2025. Now, this means we haven't yet seen the final audited, really granular details on their free cash flow, which many see as the ultimate test of profitability, the actual cash the business generates, or their precise debt levels. So here's the thought to leave you with. What if the crucial details buried deep in that upcoming filing fundamentally challenge the current narrative? What if they challenge the sustainability of operational cash generation or maybe reveal more debt than expected? That lack of definitive, audited free cash flow data right now, that's probably the key risk to explore further before October 28th.